Hi, I'm Peter Lundgren, founding CEO at Lundgren's Capital.
And I'm Mel Lopez, Chief Economist for ASEAN.
This is Sound Economies with Mel and Peter, a weekly East meets West podcast by Lundgren's Investor Insights. Join us as we dissect the biggest and most interesting news on economies, financial markets, and central banks globally. Welcome to the show. Hello, Mel. How's things this week, and what have you been up to so far?
Very exciting week, Peter. Globally, as we all observe, a lot of movements in financial markets and geopolitical issues wise as well. So it's been quite an interesting week to track these developments. Of course, these all come into play with our Lundin's Investor Insights articles that we're working on. How about you, Peter? Busy week as well, especially for people in Denmark.
Yeah, it's no doubt that the financial markets and in particular politicians, they can keep us busy, basically 24/7. And though we do also do some business in between, honestly, and that's good. It's good we have the clients to speak with some sensible people. But yeah, and all of a sudden, Denmark and Greenland have taken the center stage earlier, but
Mm-hmm.
now I must say that my home country, Denmark, is I don't know. So we are at least getting some talk. If you're very optimistic, you would say to be mentioned is the best in the world, regardless how and when. Then we our branding value is as a country is really on the rise. Um, but let's try to dive into a
Mm-hmm.
couple of the issues that we sort of now have on our table this week, and is yeah, we cannot avoid to discuss what's going on, of course. But we will actually start in Japan. Have a look at the cost of living and again see it in a bit more global perspective, where we argue that a mega trend is growing and evolving. Then we briefly visit your neighbor country,
Mm-hmm.
Indonesia. There seems to be now a global trend that is appetite for central banks. That can scare us. We don't like that, so certainly we need to stop over there. And then, of course, as we mentioned, the new dispute between US and Europe, so to say, or EU, part of EU. To prolong that conversation, we will just stop at the dollar and the greenback and see if we have any changed or confirmed outlook there. And of course, as always, we try to take the temperature and see how much sunshine there's out there in financial markets. So yeah, everything is going on, Mel. But let's, as mentioned, let's start in Japan.
Yes, Peter. Actually, Japan is has been quite an outlier globally in recent months. Apart from pursuing a rate hike mode while the rest of the world is cutting, they're now really focused on hoping to address at least, rising cost of living under a new prime minister. And Prime Minister Takaichi, their first woman prime minister, is pursuing a an expansionary policy where they're looking to cut or temporarily remove an 8% tax on foodstuffs. So food consumed will be potentially tax free. And among other things, it's also kind of a ploy to maybe win some votes when there's talk that she will call for a snap elections in February, just so they could form a bigger majority in parliament and they could push forward their policies at a much faster rate. And this is one of them. At the time when there's very weak growth, stagnant wages, and stubborn inflation in Japan, of course, aging population is also playing a role here. They're trying to bring prices down through the removal of the taxes. Well, that sounds good. It will temporarily ease some of the cost pressures faced by households, but it's not really a long-term fix, of course. We consider how big of a revenue hole this will create, and that's around $32 billion every year.
Mm,
And it doesn't sound too good for a country that carries a debt load of 237% of GDP. So more
Mm,
than triple of their size, almost. So it is a
mm,
concern, especially we always know that public debt, a high level of public debt isn't good.
mm,
Investors are always nervous when debt comes rising, especially when it's already coming from this level, this magnitude. And markets
yeah.
are already nervous towards Japan. The Nikkei 225 has been down 3% over the last 5 days. Bond
Mm,
yields have been rising 20, 25 basis points after this piece of news was announced. And yeah, of course, Takaichi saying that they will finance this revenue gap or foregone revenues by improving revenue collection,
mm,
reviewing tax subsidies and tax breaks given to investment companies. But we know Japan, they're a developed country, they're highly efficient in terms of
mm,
operations and governance. So I'm not really sure where they can cut corners there. So that all the more adds to the nervousness towards the Japanese economy, which is already reported a shrinking GDP in the third quarter. They were at negative 2.3% last year in the July to September period. So it
mm,
really is something worrisome. And I guess it could also sound like a cautionary tale for the rest of the developed world, which are also dealing with cost of living issues, which we've
mm,
discussed as a mega trend in past episodes, Peter. It is a concern as more felt in the mature economies. And sure, this is one way to deal with that. But again,
mm.
I don't think it sounds sustainable.
Surely they are economically balancing on an edge. Yeah? It starts to be a bit high stake game. Yeah? But politically, it could be very wise to take a snap election because the prime minister she's showing taking action, and this
Yes.
is what people they reward, what voters in the Western world actually reward currently. That is to take action. Yes, and one of the reasons why we raise Japan and the latest initiatives is, of course, Japan itself is interesting. It's a big destination for investors.
Mhm.
But also, as you mentioned, we are at long range growingly playing with the mega trend, thinking that it is in the Western world that people, households are suffering from, let's say, some call it higher food prices, and some would say it's the general cost of living. It is an outspoken concern in many Western countries. And we have mentioned it also, as you say, in prior episodes, podcast, that in emerging market countries, in how many households, food prices are always a, how to say it, a concern, so to say, because if all of a sudden, if they rise too much, then it is really sort of painful. But right now, there is no alarming concern. It is pretty stable, everything.
Mhm.
Households in emerging market countries, and we are talking about hundreds of millions of people, and also coming as a moving into still moving into the sort of lower middle class. They are now able to pay for the food what it costs,
Mhm.
and apparently in the Western countries, more and more people are suffering from paying for the food. This is a historical trend change and game changer. If we all of a sudden now really feel and see that emerging market countries households are better able to pay for the food than Western country households are. This is such a big trend and game changer that it should lead any investor to really consider how will the next 10 years look like in emerging markets and Western countries. And I can assure
Mhm.
that this is so difficult for politicians to deal with. It indicates the ongoing sort of squeeze we see in Western countries, the political squeeze we see, also the fight between countries, also across the Atlantic. This is, as a mega trend, is something big. It's not defined overnight. and it's not defined on a day, or if you and I, we spend time together on a flip chart or the whiteboard or whatever. This is something that we could see emerging, but it is so mature that we actually see it as not in the start of our thinking. We haven't concluded yet, but it's a big thing. Good. But yeah, and that's why we spent time on it also today because
Mm-hmm.
this is so big. Anyway, let's jump into a bit more operational stuff. The appetite for controlling central banks. Indonesia. What is now going on there, Mel? Tell us.
Yes, Peter. Actually quite connected as well regarding political leadership. In Indonesia, President Prabowo, who's really suffering from declining popularity in recent months, definitely lower than his predecessor Jokowi, um, is under fire yet again. This time because he is nominating for a second in command deputy governor post at Bank Indonesia, his own nephew. And of course, it doesn't really leave a good taste in the mouth because it sounds like nepotism. But of course, the defense is this person. His name, he is currently the deputy finance minister, Thomas Jiwadono. He is a longtime political party official as well at Prabowo's um political party. So it does really sound more politically motivated than anything. Although there are two other nominees for the position. So someone from the Bank Indonesia's deputy governor, a roster, resigned. The two other nominees are, of course, career central bankers in Indonesia. And then here comes the presidential nephew coming in as a nominee. So some people are from the party are defending him, saying, "Oh, an experienced businessman. He knows finance anyway." But well, we know the difference between fiscal and monetary policy, and it doesn't really work that way. Another It just adds to the many problems of the government. They're just coming from civil unrest last year, of course, as well due to lavish lifestyles of public officials. So it doesn't sound too good, and it's just more reputational than anything. Like what Trump is trying to do, probably with the Fed. This could be a strategy to do that, especially when Indonesia is facing some headwinds, although still growing rapidly in the past year. They are facing some headwinds, and just today they actually held interest rates steady at 4.75, and inflation is rising in the
Mhm.
country. So I understand why that was the decision. Maybe not for the political leadership, but it should be kept separate, really. So it's another threat to central bank independence. And of course, that is also not good as far as markets are concerned. There could also be, an income motive here in a way that I don't know what's the level of like the pay for Indonesian central bankers are, but I know that here in the Philippines, they're the highest paid government workers, at least
Mhm.
legally. So maybe there's that as well. But it does
Yeah.
sound more like a political move more than anything.
Of course, on a general basis, it could be discussed how many central banks in the world are actually completely independent.
Mm-hmm.
It's not necessarily a lot. If we look into uh, who are sort of placed in the boards and so yeah.
Yes.
Uh, um, Before the euro was created, the German central bank was a true independent central bank, and they had the guts to show it now and then.
Yes.
This is just as much about does the central bank really as sort of do they feel they have the power to show the independence? But what we see in Indonesia is some where let's say it's a bit more than we raise the eyebrow. We don't like what's happening. So this kind of so direct influencing the central bank and also the people, how to say it, in the board and surrounding the central bank. It is something that is extremely unhealthy. an example on where the last time I'll say that we at Long Range Capital took the consequence in terms of investment advisory was in Turkey some years back now. Over two times, the president, in principle, the president Erdogan, he took more power over the central bank, and already after the first round of trying to take power away from the central bank and get control over the central bank, we advised investors to leave Turkey and see the country as uninvestable, and we have not changed the view since then. And it also ended up in extreme inflation as the prices went down in the drain, and we will still consider Turkey as sort of they haven't recovered yet, yeah. And
Uh-huh.
this is how we see it. We as investment advisors and also position takers in our funds, we're very very harsh if these things happens. Argentina is another fantastic example, yeah. But so it would be a disaster if a huge economy in Southeast Asia, like the Indonesian economy, all of a sudden sort of try to size the central bank. It would be a disaster, and it would
Mhm.
leave as investors would simply leave the country. So it is not advisable. We hope that some surrounding the Indonesian central bank, they're listening to our podcast. But it will simply be our view. We are very because it is just the experience. And of course, now we also think about what is Trump doing towards the Fed. Yeah, now and then there have been attacks on the Fed, also before Trump he arrived
Mhm.
in there. But still, it is not healthy. Yeah. Good, pretty serious themes so far. Well,
Actually,
it's
Peter, I'm
it's
more curious about what you, as a resident of Denmark, would say about what Trump is trying to do with you and Greenland.
as I can confirm, a lot has been said. And a lot of people are saying a lot of things. And not only Trump coming out with sort of his 24/7 news stream. I simply don't know if it's live or he relays some headlines to come out while he's republished while he's sleeping. I have
Someone's
no idea.
managing it, yeah.
But there seems to be a tendency that everybody thinks they should respond on each and every headline he releases, and that is actually not to it's not the way to handle a news stream. You always need to have an idea yourself, where's the world heading, and
Mhm.
try to analyze and try to dive behind the headlines, and very fast decide which headlines are actually important in your view, and most of news headlines are simply not important. And that is not only about the twist or whatever it is between US and Greenland and Denmark and the rest of Europe. It's actually also in general for investors and for I would say for many people. So we are met with headlines all the time now. Yeah, news that might be news, but they have no importance for your position or you as a person. And so, and that is very important to fill that away right away. Anyway, but we are sort of a bit in the center of the storm. Let's be honest. But what is sort of the investor's perspective and take on it? The threat about as we're going back to a tariff war, that of course bad news. It can as there's sort of there's no positive, there's no upside. We are back in the conversations you and I have had since Trump introduced the tariff war thinking, that it is sort of a value destruction, and that is no more or less, and that is how it is. In the first round last year, the stock markets reacted, but recovered pretty well.
Yes.
Now we could start to have the conversation about as in how much can you stretch investors, how much can we stretch the global economy or the transatlantic economy, and how much can we stretch the connected stock markets. I think there is actually I think there is a limit somewhere.
Yeah.
As a it will be. Um, the it will have a price for a stock market. We have also in Q4 as of last year called for correction in stock market. No, we by no means could have pointed at this development, this political development, by no means. But any kind of development, yeah, could sort of lead to the downwards correction in the stock market, and that is still possible based on dispute. This is how we see it, but it's not enough to step out as such. Is not a turnaround in the stock market. It is a potential correction. It could be the reason or the cause for the correction. That is sort of is actually the main takeaway. Should we look at what is in the discussion that's is right now escalating? It's still escalating, basically.
Mhm.
As the threats and the stakes that are on the table, they're still escalating. And honestly, in the first presidential period that Trump he was in White House, Denmark did promise to improve the spending, military spending in Greenland a lot. We did not deliver, and that is the truth. That's how we see it here. So, is that the whole reason for the dispute? No, it's not. But it's fair to be criticized. Then we in Europe, we have really, really difficulties understanding the US government, as we truly have. And there were signs last year that we should have seen more clear. We wrote an article about it last year, and that was a Eurozone article, and we wrote about the three knights that came to Europe. And the three knights that were sort of the forerunners for President Trump that now himself is showing up on the way in a plane now again
Mm.
after it had to turn around due to technical issues. But he probably will arrive, yeah. That's for sure. And it's, I'll say that's to expect. But the three knights that were sent out to Europe last year, he's second as a first man down. Yeah, so it's J.D. Vance,
Mhm.
and then we had Elon Musk, but also such a fantastic person as the CEO of Chase, J.P. Morgan, the biggest bank in US. They all came to explain the Europeans that Europe is dysfunctional in terms of when it comes to do business. J.D. Vance, he could have done it. He could have added a bit more diplomacy. Uh, Elon Musk, he should have taken a completely different way of sort of addressing his message. Honestly, so the most diplomatic was from Chase J.P. Morgan, yeah, of course, CEO. Addressing his in a speech in Ireland, it was much about the capital market, but it was also about Europe. We are not doing enough. There has been 2 decades of standstill, and now we have sort of a squeeze and dispute with US because what happens is that the world is moving, but the politicians have been in a standstill. France and Germany, we have criticized it so often. Go back to everything what Lundgren's Capital has been writing the past 10 years. We have mentioned it, and we can only repeat it. This doing no reforms. All of a sudden, the whole world is moving. The economy in the world are moving. We are seeing no growth in Europe and high growth in new areas, Southeast Asia. All of a sudden, it comes to squeezes. We see US squeezed in a low growth situation all of a sudden, and then people start to fight. Yeah. Now it's on a political level, and let's hope it'll just stay there, and it's what we expect. The outlook is we'll see more, as we will see more dispute.
Uh-huh.
This is my thinking. It can be that the tariff sort of war can be settled again, but the dispute will continue. So then it is just another discussion about who's not doing what. Yeah. So this is sort of the outlook, and this is due and this is when we're returning a bit to the investment horizon. Could it squeeze the stock markets a bit lower? Yeah, it could actually. It could turn the moods to be sour. Despite there's a lot of optimism, there's strong cases out there, and this is not key, but overall, yeah. And if we sort of, as a last point, revisit our view on the US dollar. We are forecasting a 10% drop in the US dollar, in particular against the euro this year, and that is after a 15%, up to 14, 15% drop last year. That is very unusual that 2 years in a row the dollar would actually move so much. The reason is the political scene, in particular in Washington, D.C. The way of acting will make investors nervous when it comes into budget discipline. All of a sudden, Trump he needs to gain something ahead of the midterm election.
Mm-hmm.
He will probably use as a fiscal policy and hand out money, do everything whatever he can to win some voters. And that will hurt the fiscal discipline in the US, and that will hurt the bond market in the US and hurt the dollar, and also the sort of the current policy rhetoric is no good for the US dollar. And this is as we are a bit sort of confirmed in that view right now. So this is sort of trying to boil it down into sort of these 7, 8 minutes and of everything what's going on and what do we actually expect. This is a view from Denmark. It's nothing. It is more the view from Long Range Capital, of course. Anyway, but we're in the middle of the storm. But it all sounds a bit cloudy. But what do we say to the world, Mel? Where are we?
We are right on the mark when we said earlier this year or even late last year that there will be more volatility facing the world, the global markets this year. Of course, we did not see this coming at all. But then again, given uh, the US or Trump's record, he'll find a new uh, issue to pick to pick a new enemy or something like that. And I think a lot of the US dollar weakness and the upcoming market correction or decline of US stocks is a result of what the US is trying to do or their own policies. So they really don't have anyone else to blame but themselves. But as far
Mhm.
as global markets are concerned, Peter, yes, there are more clouds in the horizon, but I guess this also explains better why for Lundgreens we like to focus on the unlisted markets as well in Europe. At the time when growth is stagnating at on the macro level as far as the big European economies are concerned, there's opportunity that remains there and we can focus on that, and that's one way to approach it. As far as Asia, of course, there are also promising pockets of growth here, especially among the emerging markets like China and Southeast Asian economies. So those are the areas we're excited about and we remain excited about while we wait and see what happens with the US and the rest of the mature economies.
So we see, as now we've been a bit cloudy talk today, and there are certainly some short-term clouds passing by. And but anyway, as we are generally optimistic about the world, we have in Q4 advocated for changing stock portfolios towards being a bit more robust against higher volatility, and also saying, okay, the stock market in general could go down 10%. That also means that some segments should be reduced a bit, like tech stocks, and so they could go down more.
Mhm.
So that is actually what we simply just keep. And should the markets go down 10%, as mentioned, it's not enough to leave the market. Um, it could actually be to buy the market, and we are still on the optimistic path, but it is volatility. Yes, it is how we stand right now. So we are actually we remain pretty happy also in the storm. So I believe that's it. Yeah, for to conclude, and we will say for all the listeners to listen to a bit concerned, but still with the positive outlook this episode.
Thank you, Peter, and thank you to our subscribers.
Thanks for tuning in. We'll be on the lookout for market developments worth watching. Catch the next episode of Sound Economies, Mel and Peter on the global financial markets, available on our website and on Spotify.
Here at Lundin's Capital, we've spent over a decade building a strong track record with our full suite of services and high performing funds. Now we're setting our sights on something even bigger, an IPO in November 2027. It's been a long time coming, and we are ready for the journey. Join us in our next big step. Visit our website to learn more.